Hi there, and welcome to Real Estate Divas. Today we have a fabulous guest, Kaylee McMahon, and she is going to tell us all about raising capital for every kind of deal you got out there. But she is an expert in that field, and I can't wait to hear what she has to say right after this. Hi there, and welcome back to Real Estate Divas. I'm Jer'Leigh Thompson, and I'm with my fabulous host, Kristin Gerst, and we are here talking to Kaylee McMahon. Hi, Kaylee. How are you doing?
Hi, I'm doing okay today. Wish the weather was a little less dreary, but I've got you with some sunshine today.
Yeah, the sunshine's inside today.
That's right.
All three of us. Woo!
That's right.
I'm so excited to hear about everything you have to tell us today about raising capital, because that's, as we grow in real estate, then that becomes more and more of a bigger deal as you want to take down the bigger deals. We're not all independently wealthy, and that stockpile is not quite as high as we'd like it to be. And so we've got to raise that capital. And I feel like that tends to be the obstacle for a lot of people. They're like, I don't know where to find that kind of money.
Yeah.
So let's just jump right into it. What would be like the first step? I think people tend to do it backwards. Aren't we supposed to, shouldn't you go out there and start looking for the capital first before you find the deal?
Yeah, so this is not legal advice. I'm not an attorney, but as far as it goes with legally what you're supposed to do, yes, you're supposed to essentially figure out a way to bring in that audience, to have soft commitments, and have a relationship with them before raising or taking any capital from those investors. Yeah.
But we're talking about higher net worth, because there are other ways to get capital where, you kind of need a deal first if you're going to an established lender.
Yeah, I think it depends on what makes up your capital stack. So what I mean by that is when you go into a deal, you could have people bringing in money as a lender, so as a note. You could have people bringing in money as preferred equity, so they have a larger chunk of money. We've done other parts of the stack where it's a tenant in common, so a TIC or a 1031 exchange. We've done JV partnerships. There's a lot of possibilities.
There's a ton of ways to skin that cat, right? So there's a ton of different ways to raise money for properties or investments that we want to take down. But if we're talking about we need multiple investors because we're taking down that multi-million-dollar property, whether it's office or commercial multifamily or something like that, then you're trying to gather that money, and it's not from a lender.
How do you start?
Yeah.
So to finish answering your question about the different types of groups of people that could come in, if you had a way, regardless of if it was your first time raising or your 80th time raising, and you had all vetted by a third-party service accredited investors, yes, you can advertise. Yes, you don't need a pre-existing established relationship with those particular people. And that question was again what?
Well, the accredited, I'm going to stop you. We're working into that question. But the accredited, just so that everybody knows, the difference between accredited and just having somebody that wants to give you money for an investment. What's the difference?
So there's, I guess, I'd say 3 silos. So you have one that's accredited, and everyone kind of gets the terminology a little bit mixed up, where you say sophisticated, like, I'm not sophisticated. That's not what that means. It means that there's several levels of who could get into a different type of securitized offering. So an investment that's selling its shares or securities, you have to qualify. So there's 3 silos, one being accredited, and that's, I don't want to say top, but meaning those are usually the highest net worth individuals. I can go through the definition if you'd like. Or you're sophisticated, that's like that next level down where you have substantial business knowledge. Typically it's real estate, not always. It could be that you are a C-suite executive, you started your own business, but you're able to merit the risks and benefits of an investment, and you feel secure saying, hey, I understand the risks. Then You have another silo, which I'm only bringing this up because it's new even to me, is 88% of the remaining United States population that's out there. Everybody else, right?
Yeah.
They can invest as well, but they're not considered accredited or sophisticated. They're like my grandma, my aunt, the average
family
Jane,
and friends.
Average Jane.
Yeah.
And it needs to be family and friends in
No,
that.
no, not at all. So that's why I bring that up as far as there's ways to raise money from accredited investors publicly. The sophisticated investors, it's got to be private, friends and family, buddies. And then you're limited to, I think it's like 37 of those for a certain type of offering, Reg D, 506B, buddy. And then there's Reg A Plus, and then what I'm doing is crowdfunding for the remaining United States population who normally wouldn't qualify to fall into those other two silos. So it is possible for sure, but it just depends on what vehicle you've set up, for your fundraising.
And how much do you need to be considered an accredited investor? Just liquid cash or liquid assets?
Yeah, so that changed in 2021. So in 2021, so we have the Tax Cuts and Jobs Act, and it was amended essentially in 2021 to allow 12 million more households to be considered accredited because there were a couple new things added in. So normally what it had been is you make $200,000 2 years in a row as an individual, $300,000 as a couple, or you have $1 million net worth minus your primary residence. Now, in addition to that, if you have any business or LLC that was not created specifically for doing a real estate deal, you can have $5 million in assets. You can be an Indian tribe, you can be an LLC, you can be an S corp, you can be a trust, you can be whatever, and if you have $5 million in assets, you're accredited, the whole vehicle.
Got it.
Or if you are a series, I'm going to get this wrong, but a financial advisor that has your series, I think it's 83, 65, it's 72. I get that last one wrong. But you can look it up on the SEC's website that it defines. So if you're an investment advisor in those, in licensed and actively licensed, you're considered accredited. Also, if you're a fund employee as well. So if there's someone like me that has a real estate fund and you have a CFO, she has substantial knowledge of what the heck is going on in a fund, how it works, discount cash flow methods, our accountancy. There's other fund employees, but they're also considered accredited. So that was expanded in 2021. Like I said, 12 million more households are considered accredited now.
Wow. I didn't realize that.
yeah.
I mean, I knew accredited and the difference, but I didn't realize that little thing added so many more potential.
And there's a couple more. I just have a slide on it. Can't remember all of the points, but
Yeah,
you
yeah.
go to the SEC's website. It's expanded for the definition.
Very cool. So just to be clear, whenever it comes to the sophisticated, they have to qualify based on what kind of assets and their net worth and all of that.
So that's accredited.
I mean, accredited.
Yes.
Sophisticated, it's friends and family, and that's where you can't advertise, can't put it out there. You can only reach out to them personally.
Yeah.
Right? You've got a relationship there.
Pre-established, pre-existing relationship. Yeah. So what we do is whenever we talk to you for the first time, we do it through an online medium, or I have a qualification quiz I have people take, and there's a timestamp on each of those interactions, and I have an automation that puts it all in one spreadsheet. So if there's ever an issue later on, I'm able to track when did that relationship start. Even if they're family and friends,
Exactly.
I still,
Yeah, you
just
still do
you
that.
got to cover yourself,
I've been through it where
Yeah.
I had to go look down there and show a court that it existed. So
Wow.
do it.
Wow.
Yeah.
So
Wow.
always make sure it
100%. Yeah, always advocate for yourself. I mean, no one else is going to keep you safe but you. So it's your duty. We're grown women, and we can
We
do
can
that.
do this.
Yes.
So this other silo that you're talking about, to where you can do crowdfunding, this is total news to me. Did you know this? With
Yes.
just that.
He's like, yes.
Well, I mean, I thought that it had to be an established relationship. That part, the sophisticated, I knew about, but you can just do random. I thought it had to be, you had to establish that relationship.
Yeah, so that's a newer feasible vehicle, if you will. So there's always been Regulation A and Regulation A+. And so if you guys have seen some of the other bigger shops out there, like for example, Grant Cardone is someone that usually not everyone, knows in the way that he's able to advertise an offering that's available to every Joe Schmo and take $5,000 is because he does Reg A+. So yeah, that's one example of a possibility, and I think he's in Reg A too. But there's other people that do the same, and I think CrowdStreet's one of them. Same thing. Realty Mogul, I believe, same thing. Some other crowdfunding platforms, but they're not necessarily all doing the same thing. CrowdStreet is accredited only. Grant Cardone can take everybody. But to get to your question, that's been a possibility. It just takes a long time and a lot of money and a lot of vetting through all of your financial statements, your bank accounts, your past business, your any kind of lawsuits and records, disclosure of everything they have to go through. So it takes a lot of time depending on how large your company is and how long you've been in operation, you know.
Gotcha. So for the individual who's crowdfunding to raise that money.
That's Reg A, Reg A Plus. Crowdfunding, really the same thing, but it just is a little bit less expensive to set it up. But I mean, I've been doing it, and I'm teaching a class on it right now. All my mistakes that I've made as far as doing something for the first time, not enrolling the right people in it that wouldn't take advantage of me because it is your first time. People always seem to do that. And then for me, it's been over 14 months to be able to get this thing going. So I could have actually just done a Reg A, you know, but that's plus 6 figures to be able just to set up the vehicle itself. So I decided to go crowdfunding because I thought it would be a little bit easier, a little bit more affordable. But I'm learning. It is more affordable, but you know,
definitely not easier.
Not easier. No, they still have to look at all of your things.
So when you're, I mean, and also just for raising capital, even when, I mean, you're talking about securities, which is a completely different animal than, say, just raising it to do one property, to do one flip, where they're going to get direct ownership.
Yeah.
And I mean, it's still raising capital.
Yeah.
To find these people, how do you do it? Like if you're just a regular person and you're starting and you're like, I need money for my deal.
Well,
what's your number one piece of advice to like find people to like be an investor with you?
Going back to what you were saying, as far as going backwards, I think that all of us do that. You know, and so the best way to solve that problem when you've already kind of made the mistake of not figuring out like who are your perfect archetypes of the investors, already having an established relationship, et cetera, is partnering with other people on a deal, and hopefully they have a network. And then you've got active sponsors that are able to bring in their networks together and raise the capital. But if you're preparing ahead of time, which, you know, I definitely suggest, there's a lot of self-evaluation and really figuring out what is your value, and knowing what that is, and knowing who you speak to and who identifies with you. And that takes some analysis first. And when you're able to kind of figure that out on an emotional level, a financial level, like who am I speaking to? And then you're able to define your sandbox, if you will. You're not on Panama City Beach, you're in a sandbox with 4 people and all of them will enroll in what you're doing. So it's a lot more effective whenever you've done that. But that takes for some strategy, you know, ahead of time. So that's the ideal way to do things, is being able to figure out who your audience is. And again, it really is, you know, just getting data from those people that, if you're raising from even friends and family, like who are you? What are you going through? What do you need right now in your life? The biggest, best thing to do is find people's fears, you know, that they have and what drives them, because emotions will drive people to take action. What are your fears right now? Oh my God, I'm never going to retire. Oh my God, I don't have enough money to invest. Like whatever their core problem is, and if you can solve that and then speak to that in all of your marketing, all of your copy, all of your photos, all of the things that you do, you'll be highly successful at attracting those people who, I wouldn't say your conversion rate would be 10% anymore. I know mine is over 50, 60%, if not higher, depending on what I'm doing, you know, so that's more effective. So planning ahead and strategizing, I would say, is the best.
Like you just said, that the planning ahead, but we say it all the time, your network. That's really what we're talking about here. Mm-hmm. And that's why networking is so important, you know, and even the people that you already have in your life that you don't even, I mean, over the last 5 years, I'd say more people have reached out to me that I was like, I had no idea you're even interested in this. Mm-hmm. And that's my bad, you know, really and truly, because I'm not engaging with my network enough.
Well, and I find that it's just anytime I meet somebody, I just tell them what I'm doing. Mm-hmm, mm-hmm. And amazingly, somebody will go, oh my gosh, do you need any investors? I'd love to be a part of that. And I mean, it is that easy to have people to give you money. I mean, really, and invest with you by just talking to people and telling them what you're working on, and telling about your last great deal, because everybody wants to hear about
your last great deal, your deal you're working on currently.
Right. And you know, the excitement of real estate investing, because, you know, everybody watches HGTV and sees it and goes,
there's the good and the bad that came with the HGTV. And the good part is that there are more people that are now interested and think it's a possibility. They'd like to be a part of things. Whereas I think before it was a smaller pool and people thought that was like intangible, you know, I can't do that. That's for these people, you know. So it is more tangible now for sure.
Right.
Yeah.
But I mean, I would say that for me is the number one way to get investors. I just talk to everybody and I'm like, yeah, I'm getting set to do this and this. Oh, are you looking for more capital? I get that offer, right? That, you
Yep.
know, all of a sudden somebody
Yep.
reaches out, they're like, oh, hey, I'm looking to put some money to work.
Yep, absolutely.
One thing that is new, again, with that new regulation in 2021, as far as being able to expand what we're allowed to do, it was also related to being in a lockdown, you know, and saying, well, how am I going to stare at myself in the mirror every day and I can be resilient and go back to those who've already invested, but how do I do that now when I can't meet with people? And so that was another huge pivot point, which I still do that, and then I also now get the additional awesome benefit of being able to still do it in person too. That came back, which was great. But learning how to pivot came with some cool advantages where it's called there's a regulation called Test the Waters, TTW, that also came out at that time. So for free, and also depending on the platform, and also regardless of if you actually get your offering published as and I hate to, again, not legal advice, regardless of if it ends up becoming a crowdfund offering, regardless of if it ends up becoming a Reg D offering, a Reg A, whatever, that you can do TTW, Test the Waters, where essentially you find a platform, and I mean, there are platforms that are for crowdfunding, right? And they would want you to eventually pay them to host your offering on that website. Some of them will charge you $100, some of them will let you do it for free, and I hate to say it like this, but if you want data, like I want data, and I'm sitting at home going, who do I blast this to make sure that they're going to buy? So they let you basically figure out what is your copy going to look like and have a couple different landing pages on their site. And so they already have pre-tested audiences that are looking for investments. They also usually have a network already investing inside their crowdfunding platform. And there are other platforms out there too that aren't crowdfunding, but TTW will let you use their platform. They sometimes will have an internal attorney, but essentially all you're doing, using their algorithms, your audience, and testing, hey, if this page, this page, or this page was live, which one would you more likely invest in? It's literally just asking them those survey questions. How much would you invest? What is the limit? What is the minimum, maximum?
Interesting.
And so right now I have like a landing page where it publicly shows how many people are interested and at what investment level. So I already know here's how much I can raise. So I haven't spent any money on it. Technically, if I just went that way, I'd be happy to counsel someone through this because I did it the hard, expensive, long way. But I could have tested there,
And now, you know,
tested there.
yeah. Now you're like, oh, well, this would have been a nice shortcut.
And so honestly, even if the thing doesn't go live, the government is allowing you to put a publicly advertising or is allowing you to put something out in the universe that collects some data, even if you don't end up filing the offering, which either has to be public or private later when it's a real filed offering. Mm-hmm. When you're just getting data, it's not a thing. And all your disclaimers are saying, I'm not collecting funds, basically. There's like 4 lines of words they tell you. It's a rule that they give. And then all you have to do is when you put those pages out there and you just take the copy and you put it in one spot and you have to collect that because when you do file that next offering that has to be submitted along with it, hey, here's what I put out into the universe, like great, just need it on your file. You know, so it's a way to get like data and know if you're stuck at home because some of us, you know, are sick. Some of us, you know, don't live in a big city. Some of us, you know, anyone can raise capital.
Yeah.
Or
you're doing some expat living thing.
Yeah, 100%. Yeah, and that's ideal. You know, how do I be in China and do wherever and do and raise capital? Yeah.
So where did you find all of these platforms to start doing that?
Honestly, like during the lockdown, I did so much stuff. One of them was where are all the sources that capital is raised from and created spreadsheets. So one of them was retirement account companies, so self-directed retirement account companies. So I went and Googled where are all the most assets held at Equities Trust Company, and then there's a whole bunch of other ones, and essentially getting who do I talk to inside to ask them to give a educational presentation. That was one. Another one. When it came to crowdfunding, I was just playing with the idea, like I want to do this, and so I just same thing Googled. And it took a lot of phone calls and a lot of emails to figure out which platforms would be perfect for me because I'm a mission-driven business. And so for me, it was really important to have very diversified investors on the platform. So we're promoting women, we're promoting black coffee, we're promoting oil and gas that's by Hispanic men and women who own the land and the oil well, you know, just different diverse investments. So that was important to me. different people, different strokes, but then also, have they done what I want to do on that platform before? That's the other thing I needed to know. Are you comfortable with doing a real estate investment offering that's not a single house, that's a commercial offering, which was very hard to find. So that, with a lot of due diligence, kind of narrowed down, the ones that would apply. And even then, when I did all that work, I still didn't pick right the first time, because you have to look at the people who own the platform and what they do with their life and their behaviors and how they treat other people, to see if they were going to represent me in the right way, or stand by me when things got tough, or et cetera, et cetera. So what's interesting is right now, FINRA requires and SEC requires that if you are doing a crowdfunding offering, you have to go through a portal. And they take a big fat fee. People in different states, I don't know which states first, are working to undo that to where you don't have to, where it's more democratized. But as of right now, you have to pay a portal. So, but yeah, you can test first, and then I could do in a whole other segment kind of how to figure out those people that you're about to get involved with, and not to pick the wrong platform. Because really, I've found even with attorneys, I've found that they do this kind of work, or they're well known for this, but the bottom line, it's like, where are their ethics and how do they treat people, and what has their track record been, even if it's hush-hush, because it's not a thing you put on Google, because that would be libel, I guess, and slander, depending if it's video or writing. Yeah, so it's crazy. So I'd be happy to go into more depth, but yeah, it's just spending the time to vet it.
But that's interesting, because so often we're talking about in-person networking and reaching out to your sphere and all of that, but that there is a platform where you can test this, and you can pretty much, a bunch of strangers all over the country that you're like, oh, okay, I can use them. I'll just call up this handful of people, because now I know they're interested in what I have to offer.
Yeah. And if you guys want to give me a minute, I can pull up the spreadsheet and list off a couple if you want. Off the top of my head, I know Crowdfund Main Street is one of them. They did more diverse investing. Equity Multiple is another one. Equity Door is another one. Those do real estate. Crowd Street is one technically, but they only do accredited investors, so it doesn't really apply to the crowdfunding idea. Well, where I wanted the average person to get involved, so a little different. Realty Mogul is another one. I think they take accredited and private equity funds into their fund. I have a whole list.
I'm sure I'm sure they're out there.
Yeah, we can definitely, we'll grab those and put those in the...
That's a tool, yeah.
Well, awesome. So besides one, planning strategy, especially if the bigger the takedown of the property, then the more planning and strategy that you need. And then using the tools that are out there now available.
Yep.
Are there any other tips or tricks? Like, I know you said you're like, I found out the hard way on this. I found out the hard way on that.
A million times over.
Yeah. Well, that's usually where we get most of our lessons.
Yeah.
Unfortunately.
That's where they sink in, hopefully.
Yeah. You're like, come on, enough with the lessons.
Yeah. Here's another one that just as of today, what is today, the 25th or 24th or 23rd or something of October. As of now in 2022, I would say, because of what I'm looking at, where you have a lot of uncertainty in the real estate market. I can't speak for other fundraising where you're doing like a series seed round, you're taking a SAFE, S-A-F-E, from other investors, you're doing a convertible note, you're raising on different other types of fundraising.
You can't talk about real estate right now, and that's your specialty.
Yeah.
So what is your plan?
So as far as needing to know who your audience is, that's also like super key right now, because what I've seen is the fear that's out there is related to the business market, right? And I can't control that, but it does affect what we do in real estate and every other industry. So this is the key time to really know who your audience is, if you already have one, even if it's from like another business. Likely, hopefully you have some kind of, even from high school, I have a mailing list, of people from high school, but you have some kind of list of people, and now's the time to pull them and to figure out what is it that they're looking for, what would they invest in, what would make them move, what hold time period, what returns, what kind of level of safety are they looking for. Just really knowing and pulling them right now would be the time before you start a raise, I would say.
And that's a very good list for questions.
Yeah,
absolutely.
That's usually, especially now with interest rates going up, you can basically loan the government 7%. So it's kind of like, those days of getting 7%. I've got a couple of those expiring right now.
Yep.
And my question is going to be, all right, what are we refinancing at?
Yeah. What are you willing to do? So there's a lot of investors that are. I mean, there's $4 trillion sitting in checking accounts right now that's unused, and so people can invest that, but only will they when they feel safe. So yeah, polling your audience is another form of the test the waters, like I was mentioning earlier. But if you already have a pre-existing, like we've got 20-something thousand people in our mailing list, so then you have that. Or if you have other partners and they have their mailing list, you could just say if there's 4 partners, let's all ask the same questions and get polls. And if we can get at least 21 responses, we know what we should do next. That's usually a good sample, statistically significant sample. So yeah, I would say pulling them and knowing like what they're willing to do. Because here's another thing is that knowing that from Test the Waters or knowing you're from your mailing list, then you can restructure what you thought you were going to do for your offering and have a lot more success. In my world, you're able to pick shared classes of investors. So you could, instead of doing our normal 2 share classes, you could do 5. And it's a little confusing for them, but essentially it's like, well, you said that you wanted the long-term appreciation, so we're going to give you an A2 share. Or you just want the cash flow, so we're going to give you an A1 share. Or whatever it is that you want, So because people are in different age groups, they have different goals of retirement.
Like you just said, what their wants, needs, and fears, everybody's is a little bit different.
Yeah.
And so being able to manipulate things or, structure things so that it fits those
appealing.
needs, is very appealing.
Yeah, you just got to service your audience,
Absolutely.
So how can people get a hold of you?
Yeah, really easy. Just go to theapartmentqueen.com and there's a button to go get qualified, and you can find my info there. And then there's other buttons that have contact information, and even you can set up a call through the
That's
website.
awesome.
Yeah.
I've always loved that it was the Apartment Queen. Makes it super simple.
Yeah.
Easy to find.
Yes.
Yeah.
100%.
Anyway, so thank you all for tuning in today. Make sure and follow us on YouTube. You can listen to Real Estate Divas podcast anywhere you get your podcasts. Like, subscribe, follow, and share. And Jer'Leigh.
And I'm Jer'Leigh Thompson with Texel Real Estate and Real Estate Reformation. You can find me on Facebook, Instagram, TikTok, YouTube, and definitely like, share, and follow. We're trying to grow that YouTube audience, and we would love to see you and hear from you. And any information, any questions that you might have about this segment, drop them in our comments, and we would love to get back to you and put you in touch. Thank you so much for being here.
Thank you, ladies, for having
We
me.
appreciate it.
Yeah, 100%.
Yeah. Awesome. Thanks.